Oh man, in this Sunday video, we're going to be talking about the real way to take profit and manage your risk when trading crypto. A lot of people have started trading crypto. There's a new crypto trader born every single day. But one of the things I've noticed, particularly in our community in the Telegram group, is a lot of people are unsure about risk management, how to focus on the R multiple, how to set stop loss, take profit, and how to actually execute on trades, right? So if you're interested in that, smash up the likes. Don't forget to subscribe. If you're looking to set up an exchange to trade with, you can do so using Bybit or BitGet, the two exchanges I prefer to use. Links in the description. If you want to get some trade signals, check out our Telegram group, Ijaz.uk/TG, where I share the exact trades I'm taking as well. All right, so I've got a random theta chart here. This is an altcoin called Theta, and I'm going to walk you through my thought process around risk management. Now, it sounds boring, right? Nobody wants to do risk management, but you have to understand that the difference between a good trader and a great trader or a bad trader is that the great trader is able to manage their risk. They stack the cards in their favor. They're trading a volatile market just like you are trading a volatile market, but I'm going to show you in this video how you can set it up to work in your favor, that you can always build steady profits over time, because this is not a game of luck. This is not a casino, right? And that is why I trade crypto. This is not gambling. If you're treating it like gambling, you're doing it wrong, and there's no wonder why you're getting wrecked in crypto. So I'm going to break this down for you and show you my exact thought process. But before we do that, we need to start off with understanding a few basic terms. So I wanted to start you off with this brief scenario, right? So let's take this scenario here where I take 10 different trades. Now, when I take these 10 different trades, I'm going to have certain outcomes. I'm either going to win or I'm going to lose. Okay, so let's play out this scenario. Let's take out this situation where I win 5. So you can see I've got 5 wins, I've got 5 losses. What that means is that 5 have hit my take profit target, which I'm going to show you exactly what that means and how you set it up. And then 5 are going to hit losses. Okay, what that then means is that your win percentage is 5 divided by the 10 trades, which is 50%. You're winning 50% of your trade. So when you hear me saying winning percentage, what's your win percentage or your strike rate, some people like to say, 50% means you win half your trades. Now, you're going to now start to learn how even if you have like a 40%, right, 40%, or even some of the best traders at 35% win percentage, you can still be profitable, which sounds crazy, right? You're getting less than half your trades right. They're moving in the other direction than you thought, but you're still profitable in growing your account. And it all comes down to the beautiful thing that is risk management. So let's now jump back into the crypto chart. And let's say, for example, we want to go long on this position. Great stuff. We've done our analysis. You guys have worked through Ijaz.uk/TA, where you've learned head and shoulders pattern, ascending triangle, descending triangle. You've seen a cup and handle pattern. You're doing a channel breakout followed by a retest. Great. That's your thesis for taking the trade. Once you've done that, you now want to execute your trade. And when you go ahead to execute your trade, you want to set up a long position. Now, a lot of people ask me, how do I monitor my trades? I do so through using TradingView. So even though I execute my trades on, let's say, Bybit or BitGet or Mexi or one of the exchanges in the links in the description, I still like to put it in TradingView because I just like the tools better here in TradingView. I'm going to show you exactly why. So let's say I'm taking a long position here. I will click on this tool here, which is the long position, and I'm going to go ahead and click here. And I straight away apply my trade, right? So this is my trade. And so I can go into here, I can click on settings cog here, and I can set the exact parameters of my account size. So I can say straight away that my account size, my trading account, the whole account is $1,000, right? Let's say I've got $1,000 in my trading account on Bybit. That is my trading account. And the risk I want to take, remember, the risk is what are you going to lose if this hits your stop loss, right? If this goes the wrong way and hits my stop loss, how much am I willing to lose? Now, you guys know when, I like to keep this at, 2 to kind of 3% of your account. As your account gets bigger, that percentage should be getting lower. If you've got a big account with hundreds of thousands of dollars in there, you really don't want to be losing that bigger percentage. If you've got a smaller account, which a lot of you guys may be watching this video do, maybe you just want to start trading with a couple of $100, then of course you're going to have to risk a higher percentage of your portfolio, otherwise you're just going to make a couple of bucks. It's not going to be worth your while. But as soon as you start building your account, you want to get that to that kind of, let's at least aim for like a 5% risk. So if you've got 1,000 here, you can risk like $50, right? And that's a 5%. It just means you can keep going 20 times and fail 20 trades in a row, and your account gets wiped out after 20 bad trades in a row, right? Which would be pretty awful in terms of trading. So that's where we're going to start. So you go here, you can say, okay, for this trade, I'm going to risk $100 for the argument's sake of easy numbers, right? It's quite a small account at $1,000. I want to put in 100 risk, which means if we hit my stop loss, I lose $100. So now that we've set our parameters in terms of how much we want to risk, now we need to say, okay, what do we think the potential of this trade is going to be, right? If we've got a pattern, we know we're breaking out, we think this move can go up to, let's say we're looking at the chart structure, we're going to trade this up to the next pivot point. We think this is going to be our take profit level up here. That's going to give you a 6.59% move. Now, it would be silly for me to risk this, something like this, right? If I did a trade like this is a horrible trade. The risk to reward ratio here is 1-to-1. If this hits my stop loss to the downside, right, I'm going to lose the same amount of money as I would have gained if we hit my take profit to the upside. I lose 6.59% to the downside, and I make 6.59% to the upside. So in my example here, if we had 50% win rate, right, which means I won half my trades, I lost half my trades, I would be break even at that risk to reward ratio. But I'm going to show you what I'm going to do instead. How I like to trade is I like to stick to a 2-to-1 risk to reward. So in other words, if I think that's where my take profit is going to be, that's where I think the move could realistically go to based on the chart pattern I'm trading or the technical analysis that I'm using, I want to move this risk reward ratio in a little bit, bring my stop loss here to, let's say, this pivot point, and look at my risk to reward now. Right? So I'm saying if it falls below this pivot point, I'm wrong, right? It was clearly moved in the other direction. It's broken below here, below the lowest wick. Just put it a little bit under the lowest wick there. And I'm saying at this point, I want to get out. The trade has moved against me. Clearly, my thesis that it wants to move to the upside is wrong. But now look, guys, my risk to reward is 2.17%. Let me explain. If your risk to reward is 2-to-1, that basically means that if you take 3 trades, right? If you were to take 3 trades and in those you went you lost, but then you won on the 3rd trade, you would actually break even, right? Because the risk to reward is saying that you make, when you're right, 2 times more than you lose to the downside. So you can lose twice, win once, and still you're break even. So suddenly you're now stacking the cards in your favor, right? You only need a 33% risk to win percentage, which is what we discussed earlier. A 33% win percentage to break even. So now, suddenly, like I explained before, if you're now strike rating at 35%, or you manage to get yourself up to 40%, getting 4 out of 10 trades right and move in the right direction, you're becoming a profitable trader. And if you can do that time and time and again, you're going to be in a very, very good position without even getting more trades right than you're getting wrong. And this is the powerful thing about risk to reward. And sometimes you'll see certain patterns where you can even get it to 3. Right? And I know this is more rarer than 2-to-1. Most of my trades will be 2-to-1 risk to reward because I want to give more movement to the downside, right? I don't want my stop loss to be too tight. But sometimes you can get the structure of a trade right where your stop loss has plenty of position. You've put your stop loss in the right position based on the move, but it still allows you to have a 3 times risk to reward. And that's even more powerful. If you're working with a 3 times risk to reward, you can lose again, you can lose a 3rd time, and on the 4th one you can win, and you've broken even with a 25% strike rate. Incredible. You could have got 3 trades wrong, got the last one right, and still you break even. So now if you're 30% strike rate, right? 30% strike rate, 3 in 10 trades you're getting right, you can become a profitable trader if you're using an R multiple of 3. So that's why I like to work at least with 2 times R multiple. Sometimes I can get it to 2.1, 2.2, 2.3. On the rare occasion, you can get it up to 3 sometimes, but that means that the cards are now stacked in my favor. And then that brings me to a very important message, which is that you've got to let your trades ride. One of the biggest mistakes I see new traders making, particularly in our community, in our VIP signal group, which by the way, you can join Ijaz.uk/TG and message me in there and you guys can get into our VIP trade signal group where I share with you guys my setups, my TA patterns, my stop losses, my take profits, so you can see exactly how I'm executing on these trades, right? And how I profitably build my account over time. But what people do often is they do not let trades run. And this is a major mistake, guys. Let's say you're in this trade and suddenly this trade starts moving to the downside. It's so common for people to jump out of this trade. They see a little bit of red. Their emotions get in the way. They panic. They see their account going down. And what do? They close the position. And then, 4 times out of 10, what happens then? Boom. Off this goes and hits take profit. Because traders are not silly. They want to shake people out to the downside and then it goes and creates this big move to the upside. So if you're somebody that panics as you get closer to the stop loss, just let it be, guys. Remember, if you're playing the risk to reward, you can take an L, you can take an L, you can take an L, and you can take a win and you're still doing all right. So do not be scared of stop losses. If you want to trade, this is part of the thing. It's like becoming a boxer and not taking a punch. You're going to take some punches. Get used to that stop loss being here. Get used to you getting it wrong and it going the other direction. But also understand it doesn't matter, because if you've set up your risk management in the right way, if you're working a 2-to-1 or a 3-to-1 ratio or a 2.3 like we'll be working on in this example here, then you're going to be set up for good, right? And then that brings me to my second mistake, which is the same thing. This happens. They enter the trade, you get a bit of green movement, you've made a couple of percent, boom, they take profits. They take profits before the TP level. And it's like, if there's a reason for you to do that, something fundamental has changed, let's say you're trading an altcoin and Bitcoin has changed direction, or something has happened like we had in our community, which is where obviously the Middle East conflict started playing out over the last week or so, then of course you can decide to take partial profits. But if you're in a run-of-the-mill trade and you suddenly got into a little bit of green and you sell and you don't let it ride to the take profit, you're messing up your risk to reward again. Because remember, the risk to reward works on the fact that, okay, sometimes you can get stopped out, but you've got to let this ride and take the full 6.59% profits, as per this example, when the thing is moving in your favor. So if every time this is about to go here and move to the upside, you're selling too early, you're selling like here, that's not good enough, because then when the next trade hits the stop loss and the trade after that hits a stop loss, now you no longer are profitable, like I just shared with you on that spreadsheet. So very important that when you set your risk management profile, right, like I just shared with you guys, you play to your stop loss, you let it stop out, you own it, it's fine. Let another one go hit the stop loss, no problem. Because if you're working 2-to-1, when the next one rides to take profit, you're going to break even, right? And I just explained to you how even with a win percentage of less than 50%, you can become profitable trading in crypto. Now, I do want to share a very important disclaimer. Trading is not for everybody. Trading takes a certain amount of emotional control. You can't be a baby about this. You've got to take owners. You've got to take responsibility. You've got to be okay with losing money and seeing some redness. It plays with your emotions. You have to be patient. And so if you don't think that suits your risk appetite, please, trading might not be for you, okay? But investing is for everybody. So people want to DCA and hold their crypto and buy for long term. I think every single person should be an investor, absolutely. But with trading, you've got to actually understand your psyche. Are you somebody that is built for the pressure? Can you take the pressure? Are you patient? Do you have good risk management? Are you disciplined? Do you follow all the steps like I shared here? If you're that type of person who's quite diligent, this is going to work great for you, and you can. Don't let anybody tell you can't build sustainable profits. And you can see from our group, we're doing it day in, day out, and I share the results with you guys publicly in our Telegram group as well. And finally, guys, a lot of people ask me, how do you enter the trades? How do you actually execute it on the exchange? How do you set up your stop losses? How do you do your take profits? If you guys want a separate video on that, on any specific exchange, I might just do a couple of videos on the different exchanges so you guys have it in one place. Let me know in the comments, and I can get those videos spun up for you. But in essence, you want to set yourself up limit orders. Limit orders are your friend, guys. Do not execute market orders. When you execute market orders, you're getting executed at the best available price in the market at that time. And often you get a lot of slippage, which means you go to execute on a trade right now and you get filled, your position actually gets fulfilled at a different price point because the market's constantly moving. It's not waiting for your position. Now, when you set a limit order, you're saying very specifically, I want to enter theta, this trade right here, at 0.594. And if the price hits 0.594 and you can get filled, then you're in the position. So instead of using market orders, and again, if you guys want this as a separate video, you got to shout in the comments. If there's enough people asking for it, I know it's going to be worth my time recording this for you guys. If you guys aren't asking for it, I'm not just going to spam spout stuff down this video for no reason. If you guys 0.594 as a limit order, you're going to get filled. And same for your stop loss. If you do a stop sale, which is what you're looking to do, that's setting the position to say that when the price, or if the price hits 0.575 here on theta, which is the bottom of my stop loss, this is where I want to get out of this trade. If the price hits here, I want to sell 100% of my position. Okay, so that's a limit sell order. Get me out of the position at that price point because that's the max pain I want to take. And same for your take profit. It's also a limit sell order. If the price gets to my take profit level of 0.631, I want to sell at 0.631 multiplied by the number of tokens I hold. Okay, so that's what you're going to get in terms of limit sells in order to get out of the position. To get in the position, you want a limit buy. You want to limit your buys in to the position. Okay, if you guys found that useful, make sure you smash up the likes. Don't forget to subscribe. As always, check out the links in the description to the exchanges. I want to see as many of you as possible in our Telegram group because I'm actually going to show you exactly how I do this stuff, how I position my trade, share some free signals with you guys as well as show you the results of the VIP group for those interested in that. Hope you guys enjoy your Sunday. Thanks for watching, and I'll see you in the next one.